Howdy, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, October 12th, 2023. We'll start with our executive summary. Number one, given the evolution of our quantitative risk management signals, namely our global macro risk matrix, it is critical investors receive far more good news than bad news this week on the macro and micro reporting fronts. Otherwise, the very nascent cross-asset breakouts in volatility and credit risk will begin to snowball on themselves into a CTA deleveraging cross-asset crash. Number two, the dramatic move lower in interest rates and to a certain degree stocks higher seems suspect in the context of term premia that are still severely depressed despite having backed up 100 basis points since the end of June on the 10-year tenor. The moves in stocks and bonds seem increasingly suspect in the context of September CPI data that were also supportive of our sticky inflation theme, along with yesterday's September PPI data. And number three, indeed, we are receiving more bad news than good news this week, especially when factoring in yesterday's LVMH miss and weak Birkenstock IPO. Sentiment is no longer pervasively bearish like it was when we flagged it last week. So risk assets need positive fundamental developments to rally into year end. Thus far, they are not receiving it. Transitioning to my cross-asset performance here. We'll start with a sector performance here. S&P up 2.6% week over week, being led higher by the dog of the correction, utilities at minus 4 or plus 4.8%. You got consumer services at communication services up 4.2%, kind of in second place there. And then lagging, the only sector down week over week is consumer staples, minus 1.3%. Is that a harbinger for some tough times ahead for the consumer? Or is it just a function of the inflation story? We shall see. Factor performance, S&P up 2.6%, being dragged higher by the growth style factor. You're now starting to see value get punted as well as low beta get punted. So low beta value is getting punted in favor of high beta growth. So investors are really betting on the names that they believe will give them earnings growth as we look out into 2024, and getting rid of things that are looking to that are much more correlated to the fluctuations in the business cycle. Geographic performance. Look at S&P up 2.6% week over week. The geographic leaders are China up 5% week over week. You got Brazil up 4.3% week over week, and Japan up 3.8% week over week. India continues to lag, it only up 0.5%. In terms of fixed income, we got the Barclays Core Ag up 0.5% week over week. Limited dispersion for most of the fixed income sectors, with the exception of treasuries, TLT, treasury bonds, TLT up 1.9% week over week. Long duration securities or LQD, IG credit has extended its duration in recent decades, and so is trading a lot like the long end of the treasury curve, up 1.1% week over week with a little bit less duration risk. Currency performance, dollars flat week over week. You had a nice bounce in all currencies against the dollar, which was down as much as 1% week over week yesterday, getting to what's leading the currency market higher here. Swiss franc still ahead at up 0.8%, followed by the Canadian dollar up 0.7%. Commodities up 1.7%, finally starting to bounce and recover here. Crude oil up 3%, as is precious metals up around 3% as well. Lagging is uranium, minus 3% week over week. And then lastly, when you look at crypto here, all cryptocurrencies are down. Bitcoin's leading to the upside in terms of only being down 2.6%, and leading to the downside are XRP and Solana down around 8 to 9% respectively. And then lastly, transitioning to my Longbow dashboard here, we have a near overbought signal here in the S&P. At 44.45, so that's the signal there. We're at 43.98, so maybe a little bit more upside here to that signal. But this is not what you want to see if you're talking about a year-end rally, which is something we had very much a fundamental view that we could see a year-end rally from a behavioral standpoint, given the positioning dynamics that we've been highlighting in our research. But in the context of a risk-off top-down market regime, you got to expect bad things to happen, not good things to happen. And that's where we are until further notice. So with that, we'll wrap it up. Darius Dale presenting our macro minute for Thursday, October 12th, 2023. Best of luck out there today. Catch you back here tomorrow. Cheers.